Welcome back to week 2 of MSA 690 financial statement analysis. We've reviewed the balance sheet, the income statement, and the statement of cash flows. In this week, we're going to look at the statement of comprehensive income, statement of changes in stockholders' equity, and then some other items in the 10K or the annual report, management's discussion and analysis, the footnotes to the financial statements, and the auditor's letter. When you hear statement of comprehensive income, it sounds like it's going to be a really important financial statement. Income, we know, is perhaps the most critical and most important measure for stockholders. Then you add the word comprehensive in front of that, and it sounds like it's going to be this really, really key financial statement, but it's actually not. GAAP defines the statement of comprehensive income as the change in equity of a company during a period from sources other than, so we're basically defining it by what it isn't, sources other than investments by owners, or in other words, issuances of stock, and distributions to owners. Dividends would probably be the most common, but purchases, repurchases, stock buybacks, treasury stock is another type of distributions to owners. We really didn't define it other than it's change in equity that's not related to issuing stock, buying back stock, or giving dividends. A much simpler way of defining the statement of comprehensive income is simply 3 variables within an equation. Net income, plus or minus other comprehensive income, so plus other comprehensive income or minus other comprehensive loss. And these 2 terms combined give us comprehensive income. Now, the question that you should be thinking is, all right, I know what comprehensive income is, but what is other comprehensive income? Let's define other comprehensive income. Well, there's not one clear definition of other comprehensive income. The way that I'm going to define it, we typically abbreviate other comprehensive income as OCI. OCI is a place, an account, where we can record certain revenues, expenses, gains, and losses that are not included in net income. So once again, we're defining it in a way as what it isn't. It's changes in fair values, changes in the values of assets and liabilities, gains and losses, revenues, expenses that we have decided or that GAAP has decided are not included in net income. And typically a term that you're going to hear frequently with other comprehensive income is the term these revenues, expenses, gains, and losses bypass net income. Okay, so what are these items? Let's go to our next slide and discuss each of the 4 major items that affect other comprehensive income. One is foreign currency translation adjustments. We're not going to go into detail on any of these 4 items. We would probably need about a solid week or 2 weeks to discuss each of the accounting treatment that causes the need to have other comprehensive income in each of these 4 items. So we're just going to see them and know that these are the 4 main items that affect other comprehensive income. Foreign currency translation adjustments, certain pension adjustments, unrealized gains and losses on cash flow hedges, and then finally, unrealized gains and losses on available for sale debt investments. Accounting treatment in each of these 4 areas is such that we have this revenue, expense, gain, or loss, and it's not clear whether that should be reported as part of income. So some investors might say, yes, we would want to see that going directly through earnings. We want to see it in our key metric, earnings per share. And other investments, and particularly the reporting company, might say that's not a part of our running our business. but we have to do something with it. If it's not going to go into income, where is it going to go? We can think of other comprehensive income as kind of a compromise account. It allows the company to report, let's say, an unrealized gain or loss. On the balance sheet, these changes in fair values on the balance sheet, but without that change in fair value going through net income. Let's take a look at the statement of comprehensive income and at other comprehensive income for Johnson & Johnson. So we are going to search SEC Edgar Company Search. I like Legacy. Ticker symbol JNJ. Filing type 10K. We're going to look at the most recent. I'm going to start, since we're looking at a financial statement data, I am going to start by clicking on interactive data, go to financial statements, and now I'm looking for the statement of comprehensive income. See my balance sheet, my income statement, and then my statement of comprehensive income. And as expected, it starts with net income. They call it net earnings. These numbers should tie to the income statement. So if I want to just quickly check that, I come to the income statement. And I see those same net earnings or net income numbers that I see in the statement of comprehensive income. So here is the starting point for my statement of comprehensive income. And then I see the adjustments, the items that are part of other comprehensive income. I see a foreign currency translation loss of $1,079,000,000. And I see unrealized holding gains and losses on securities, presumably available for sale debt securities. I see items related to pension costs. Here they call those pension plans employee benefit plans. And I see unrealized gains and losses on derivatives and hedges. If we return back to our PowerPoint slides, we can see some questions that we can answer using the statement of comprehensive income. The first says, was Johnson & Johnson's comprehensive income greater than or less than its net income? Okay, so net income for the most recent year, this is fiscal year 2021, net income was $20,878,000,000. We see a bunch of items here, and then our comprehensive income is $23,062,000,000. So we know the first one is greater than. So comprehensive income is greater than net income. What item caused the largest increase in other comprehensive income during the period? So we see three main categories. We see foreign currency translation, or four categories: foreign currency translation, loss of about $1 billion. Securities, not much. Pension plans, we see $4 billion net change, $4.2 billion net change in pension plans, and then derivatives and hedges, net change about $1 billion. So this would be related to employee benefit plans or pension plans. True or false? Revenues earned from sales of Johnson & Johnson products is included in other comprehensive income. We look at what goes into other comprehensive income. That's from the items from here through here. We see there's nothing about sales there, so this is false. 4, true or false? Revenues earned from sales of J&J Johnson & Johnson products is included in comprehensive income. Well, that's going to be true, and the reason why is those revenues are included up here in the net income, and that's our starting point for comprehensive income. Question, during the period, did the company have an unrealized gain or an unrealized loss on available for sale debt investments? I come here to the securities. I know that unrealized gains and losses relate to available for sale debt investments. And we see it shows if it's in parentheses, then it's a loss. So we see a $4 billion loss. And 6 says, on which other financial statement can we find other comprehensive income? Now, we haven't covered this yet, but just to kind of give you a little peek into what we're going to cover soon, if we look at this statements of equity, we're going to say, let's just take the first year that's shown here, net income, dividends paid. And then here we see these components of other comprehensive income, employee compensation. Oh, sorry. Here we see the other comprehensive income. Now, this is not going to tie to the financial statement we just looked at because this is for the change for 2019. So if we scroll down, this is what we would call a roll forward. We have beginning balance of 18 showing the changes through 19 of equity through 2020. And then through the fiscal year 2021, we see other comprehensive income, $2,184,000,000. That should tie to our other comprehensive income here on our statement of comprehensive income, $2,184,000,000. So the answer to the question is we'll also see other comprehensive income, not just on the statement of comprehensive income, but also on the statement of equity. We will be calling this the statement of changes in stockholders' equity. On our next slide, we have reclassification adjustments. So if we come back to the statement of comprehensive income for Johnson & Johnson, we see under the securities section, even though there were no dollar amounts, there's a place for reclassifications to earnings. And we see that again under the derivatives and hedges. So what is this reclassification to earnings? Well, remember that other comprehensive income is a holding place or holding account where we put certain unrealized gains and losses, just a place to record them that is not net income. Once we have that underlying item, that unrealized gain or loss is from, instrument or item, such as the available for sale debt investment, accounting treatment for available for sale debt investments, fair value on the balance sheet, unrealized gains and losses get recorded to OCI or equity until we actually sell that debt investment. So once that underlying instrument or investment is sold, the unrealized gain or loss is transferred out of, remember, it's accumulated in other, it is recorded for one period in other comprehensive income and then gets accumulated or transferred into accumulated other comprehensive income. And that total amount, that total unrealized gain or loss is transferred out of other comprehensive income and into the income statement because it is no longer unrealized, it becomes realized. In other words, other comprehensive income items are not recognized in income until they are realized, or that related asset is sold or the liability is settled. So we started talking about this relationship between other comprehensive income on the statement of comprehensive income and accumulated other comprehensive income. So that leads us to our next slide. Before we get to that, let's back up a bit. From your introductory financial accounting class, what is the relationship between net income and stockholders' equity? At the end of the accounting period, net income is closed. We book a closing journal entry, and really what we mean is net income is transferred to retained earnings. Retained earnings, of course, is a component of stockholders' equity. Now let's look at a similar relationship. What's the relationship between other comprehensive income and stockholders' equity? At the end of the accounting period, other comprehensive income is closed. We book a closing journal entry, or plain English, we transfer the balance for that period's other comprehensive income into a special equity account. And we don't talk about it much because we only use this specific account when we're talking about transferring balances from other comprehensive income. So this specific account on the balance sheet and the equity account is called accumulated other comprehensive income. And typically we abbreviate it AOCI. Now there's a lot here that we've covered. I know you've seen these accounts before. You should have seen these accounts before, particularly in Intermediate Accounting 1. But we don't talk about them often, so it's worth going through again. And just to kind of summarize, here's a quick review of OCI, AOCI, and AOC. OCI, other comprehensive income, reported on the statement of comprehensive income and not a part of net income. AOCI, accumulated other comprehensive income, a component of stockholders' equity, and is equal to the total amount, the accumulation of other comprehensive income since that company began. And these are not to be confused with AOC, Alexandria Ocasio-Cortez, a member of the U.S. House of Representatives. And if you took intermediate one with me, and if you're wondering if I'm going to use all the same jokes that I did from that class, the answer to that is yes. And no, there are no new jokes this semester. Let's move on to the statement of changes in stockholders' equity. I talked just a little bit about it, but now we're going to add some information. Statement of changes in stockholders' equity, or the statement of equity, provides specific information about changes in retained earnings, and the two major components of retained earnings, net income or net loss, and of course, dividends. We've introduced this accumulated other comprehensive income account, and what we're going to see related to accumulated other comprehensive income. We're going to have a beginning balance, what we ended last period with. To that beginning balance, we're going to add other comprehensive income, or subtract an other comprehensive loss for the period to get our ending balance in accumulated other comprehensive income. Any issuances of new shares of stock, whether the company is a corporation has common stock, it may also have preferred stock. And then finally, the statement of stockholders' equity is going to show treasury stock, which represents the amount paid to repurchase, reacquire, buy back common stock or preferred stock. And we're typically going to, companies are going to report the statement of changes in stockholders' equity in a table format. And as we saw briefly when we quickly looked at Johnson & Johnson's, we have the total. Typically, we're going to see a column for the changes in retained earnings, another column for the accumulated other comprehensive income, common stock. Sometimes this will be reported as common stock plus additional paid-in capital combined together, and then finally treasury stock. So these are the main components we're going to see. We're going to look at them going across, and we're going to see going downwards, we're going to show the changes. So we start with the beginning balance, or last period's ending balance. We add to that net income, we subtract out dividends paid, and we show where these items go. So the beginning balance, we're going to have totals, item numbers in each one of these boxes for the beginning balance. What did we end last period with? Net income, of course, is going to be added to retained earnings. Dividends, of course, are going to be subtracted from retained earnings. We're going to have a row here related to repurchase of common stock or treasury stock. And so it would be subtracted here. We'll have a row for other comprehensive income. And where do you think other comprehensive, aside from the total, is other comprehensive income affect A, retained earnings, B, AOCI, C, common stock, or D, treasury stock? Of course, the answer is AOCI is going to be added if it's other comprehensive income, or subtracted if it's an other comprehensive loss. Other, if there's anything else, and finally we're going to get the ending balance. And we see that these totals of these accounts are also going to be able to, you're going to be able to see these totals also on the balance sheet in the stockholders' equity section of the balance sheet. Next, we have some questions. Let's do a very high-level analysis of the statement of stockholders' equity for Johnson & Johnson. We looked at this very quickly. We see a table that looks very similar to the one that we created, except we showed changes from the beginning of the reporting period to the end of the reporting period. Here we see changes over 3 reporting periods, so from 18 to 19, or fiscal year 2019, fiscal year 2020, fiscal year 2021. And that's what we're interested in, is fiscal year 2021. Nope, we are actually interested. That's going to be on the homework, is fiscal year 2021. For this video, we are going to look at 2019, the first reporting period. In 2019, Johnson & Johnson purchased its own shares of treasury stock during the period. And we might be able to find that on the statement of cash flows in the financing section, but let's see if we can also find that here. So we're looking at the 2019 fiscal period repurchase of common stock, and I do see that they did buy back their shares of common stock. So we are going to say this is true. In 2019, J&J issued new shares of common stock. I'm going to look at the common stock issued column. I don't see anything coming down these rows for explanations, and I can see that my common stock issued amount, the beginning balance is the same as the ending balance, so that means false. They did not issue any new shares. They only bought their own shares back. Retained earnings had a net decrease over the year. Let's look at our retained earnings column. Starts with 106 billion and it ends with 110 billion. So that is false. Retained earnings went up over the period. Obviously, I could have also answered that question just looking at the balance sheet. In 2019, the balance in accumulated other comprehensive income is negative. In other words, there was an accumulated other comprehensive loss, which reduces stockholders' equity. Let's go to our AOCI. I see it started with a loss. A greater loss was added to that, and so it ends with a loss. So the answer to that is true. And in 2019, the company had a decrease in total stockholders' equity. So let's see our total beginning balance, 59,752, ending balance, 59,471. The answer to that is true. Stockholders' equity decreased. And this statement tells us a little bit about how and why stockholders' equity decreased. Now let's move on to key components of the 10K. We finished all of the financial statements that companies are required to report. What else is in that 10K? We can come back to, if I come back to my J&J filing and I hit 10K here on this left side, I get the entire form. And if I scroll down just a bit, I'm going to get the table of contents. I see they're going to talk a bit about the business, risk factors, some other stuff, legal proceedings, management's discussion and analysis of results of operations and financial conditions. We have the financial statements. That about ends the key items here. So let's talk a little bit about some of these. The description of the business, they're going to talk about what the company does, what its main product lines are, the industry that it's in, and basically anything that management wants to say about the company. Risk factors, you can see some risk factors that are typically reported, business and industry risks, economic risks. If the whole economy collapses, if the stock market decreases, we expect that this is going to have a negative impact on us. Regulatory and legal risks. We might be sued by our customers for some of the products we make. FDA regulations might affect the sales of Johnson & Johnson products. Financial risks, if there's a change to the economy and our customers to credit and our customers can no longer pay us back, that's going to have a major impact on us. And then anything else lately you'll see in risk factors, I think all companies are going to talk about the impact of COVID-19 on the business. Now, what ends up happening a lot with these risk factors, it's something that we would call boilerplate language. You don't need to write this down, but oftentimes it's less useful. If we look at a couple of these risk factors, we're going to see the company's business operates in a highly competitive market, and competitive pressures could adversely affect the company's earnings. So how informative is this to an investor? Probably not so much. Interruptions and delays in the manufacturing operations could adversely affect sales. So some of these are a little more important. This really looks like something that the lawyers probably had put together. Legal proceedings, let's talk about any major lawsuits that the company might be dealing with. And we can see that there are some important legal proceedings for Johnson & Johnson. Now this is the risks section, but if I search for legal proceedings, I'll get down to the actual section for legal proceedings, item 3, that all companies need to discuss. We see that it's discussed furthermore in note 19. And so if we want to come down to that note 19, here it is. Johnson & Johnson is involved in various lawsuits and claims, and we're going to take a look at these a little bit more when we get to the notes to the financial statements section. But we can see quite a bit of product liability and then some specific lawsuits. They're going to talk a little bit more about some specific lawsuits that the company is engaged in, and we'll cover that a little bit later. Management's discussion and analysis. This is often referred to as the MD&A. Do not get this confused with MDMA. That is something entirely different and not related to the financial statements at all. But management's discussion and analysis of operations and financial condition. We're going to look at Johnson & Johnson's MD&A section and answer a few questions when we get to our next slide. There are disclosures. All companies are going to have disclosures about market risk, the financial statements, and supplementary data. And by supplementary data, what we mean is the footnotes. Report of the accounting, the independent public accounting firm, and management's report on internal control over financial reporting. So we'll take a look at some of these as we continue. Moving on to our next slide, here are some questions that we can answer based on Johnson & Johnson's management's discussion and analysis. Now, this is information written by management. It does not have to follow any specific template. It's management's chance to offer the investor some information not found otherwise, not in the financial statements. Typically, what companies are going to do is describe their sales. How did sales change over the prior year? And give some explanation about that. Sales decreased 30% because of COVID, and let's describe a little bit more about why. What were the important expenses for the company, and how did those change over the prior year? So here's some questions related to Johnson & Johnson. Let's look at the MD&A and answer, did sales volume increase or decrease over the prior year? We know that we can't answer this question just looking at the income statement. Not all companies are going to discuss sales volume, but if we look at the management's discussion analysis section, I'm going to come back. We can find that from Johnson & Johnson. So I'm going to come back to the table of contents and click on management's discussion and analysis. I'm just going to kind of scroll through here until I see anything about sales volume. Typically, we're going to see some visuals from management to try to capture our attention and show off what they want to show off. And here we see the volume. We see the worldwide sales increased almost 14%, and volume increased over the prior year 12.9%. In 2021, sales from medical devices were higher or lower than sales from pharmaceuticals. So give me that information, management. Here I see sales by geographic region, and here I see sales by segment. And so our question is, how did sales from medical devices compare to pharmaceuticals? So medical devices, 27.1 billion, and pharmaceutical, 52.1 billion. So medical devices were lower. How much revenue did the company earn from COVID-19 vaccines? Interesting question. Let's see what they tell us. All right, so here I have major pharmaceutical therapeutic area sales, and I see total infectious disease here, COVID-19 vaccine. How much revenue? Sales were $2,385 million. And then finally, research and development expenses related to the pharmaceuticals business was what percentage of sales in 2021? All right, management, tell me about your research and development expenses. This is obviously something investors care about because they want to know, what are you investing in now that's going to hopefully bring new products and therefore new revenues to my company? Okay, so up here I saw cost of goods sold and SG&A or operating expenses. And then right below that, I see research and development expense, which is part of SG&A, but it is stripped out and highlighted here. R&D related to the pharmaceuticals business, here we have the pharmaceutical business, was what percentage of sales in 2021? 22.8%. We see that's up over the prior year, so it's a way to tell the investors, look how much we're putting into developing new pharmaceuticals. So our answer is 22.8%. And of course, the purpose of this is not to memorize these numbers, but just to have some tasks, some key questions to get an idea about what questions might be answered. Again, they're not all exactly the same, the information in the MD&A, but this is pretty representative of the type of information you're going to get from many companies' MD&A about their product lines and how things changed over the prior year. So we're not trying to memorize these numbers, but just have an idea of what kind of information is in the MD&A. Let's move on to Johnson & Johnson's footnote disclosures. So we know that after the MD&A, let's go back up to the table of contents. After the MD&A, we have some disclosures about market risk. Again, these tend to be very boilerplate. And then we move on to the financial statements. We're very familiar with these financial statements. And then after the financial statements, the notes to the financial statements. Note 1 is typically the summary of significant accounting policies. And it's a chance for the company to talk about how do they make, what accounting methods do they use? How do they come up with their estimates that are important? And so here we have some questions that we're trying to answer for Johnson & Johnson based on, let's start with based on note 1. What depreciation method does Johnson & Johnson use? That's going to be in note 1, significant accounting policies. So I just want to kind of skim around or maybe just do a search to find about depreciation method. I'd actually scroll down a little bit too far. So coming back up in note 1, significant accounting policies, under investments, we have plant, property, and equipment and depreciation. The company uses the straight line method of depreciation. Okay, so let's put that in here. Sometimes companies will have a separate note for plant, property, and equipment, and we can find that information again there, perhaps. What inventory cost flow assumption does J&J have? Now let's find our inventory section. Again, still in note 1. Looking for inventory. Inventories are determined by the first in, first out method. So this is FIFO. How much of J&J's inventory is in raw materials? Now I'm not going to find that level of detail in note 1. So I'm going to look through the other notes. Now, since there's a lot of pages of notes here, sometimes the easiest thing to do is to get back to their interactive data. Back to company search. I want to see all the notes. I like to come to this field, and then over here we have the notes listed by the note topic. So it's kind of an easy way to see the table of contents for the notes on the left side here. And so let's look at this note for inventories. We had already looked through the details of summary of significant accounting policies. Let's look through inventories. And here I can see the end of the fiscal year, inventories were comprised of how much of raw materials? 1,592,000. Next question, what is the depreciable life? To find the depreciable life of the buildings and equipment, I'm either going to need to go to the footnote on plant, property, and equipment and look for the estimated useful life, but I don't see anything here. So then the only other place this could be is in the summary of significant accounting policies. So let's go back there and see what we can find about plant, property, and equipment. And here we see building and building equipment is amortized or depreciated over a period of 20 to 30 years. Next question, what type of intangible assets does the company have? Let's look at the footnote on intangible assets and see what information we have here. We see the company separates the reporting for intangible assets with definite lives because these need to be amortized. And then they show the values of the intangible assets with indefinite lives. These will not be amortized, but will be tested for impairment. And then scroll down a little further and we see the amount of goodwill that the company has and broken down into its 3 main business categories. So what type of intangible assets? I see patents, trademarks, customer relationships. I see purchased in-process R&D, and of course, goodwill. I'm not going to get all that information, that level of detail on the balance sheet. What I'm going to see on the balance sheet is the total amount of intangible assets other than goodwill, and I'll also see the balance in goodwill. Next question says, what types of loans comprise the total long-term debt amount, and what are the interest rates on these loans? So let's go to the debt footnote. I'm looking for something called total debt, long-term debt, and they call it, Johnson & Johnson calls it borrowings. Now, I'm not going to be able to copy over all this information, but what I see is a listing here of all of the notes, all of the long-term liabilities or long-term debt that the company has. The stated rate is listed here with the maturity date. This is the principal amount that we see here in column 2021, and then the effective or market rate. So we see many different loans here at different fixed stated rates. Total of 32.116 billion. Remember, GAAP says we must strip out and separately report the portion of the long-term debt that's due within 12 months of that balance sheet date, and the rest is in the long-term debt column. So rather than writing this out, what types of loans, we see many different loans at many different interest rates. Question 7 says, what is the weighted average effective rate on all debt? And they tell us here 2.89, I see this footnote, is the weighted average effective rate. So it just gives us some estimate of the rate that the company's paying on its long-term debt. We're not going through every one of the footnotes, but we're just kind of getting an idea of what information can be found in some of the footnotes. The next topic of importance in the 10K is the auditor's report. This is the report of the independent public accounting firm. And what's important about this is not the entire report, of course, but you should have hopefully had to memorize this in your audit class or for the audit section of the CPA exam. And what the auditors are saying is, in our opinion of the public accounting firm, these financial statements, in all material respects, all important high-level amounts, the balance sheet of the company, the income statement, statement of comprehensive income, and the cash flows for each of the 3 years that are shown, these financial statements are all in conformity with US GAAP. Another important component of the auditor's report, in our opinion, the company had effective internal control over financial reporting. We also see management's report on internal control over financial reporting. And the important part from that letter is that management of the company is responsible, not the auditor. Management is responsible for maintaining adequate internal control over financial reporting. These internal controls are designed to provide a reasonable assurance, so we cannot guarantee, but reasonable assurance as to the reliability of the company's financial reporting and that its financial statements are reported in accordance with GAAP. We can take a quick look at the auditor's letter and management's letter about the internal controls. If we go to audit information, is not going to give us much. So let's go to the entire 10K. Scroll down to our table of contents. And let's go to our financial statements. Here we can click on after the notes, report of the public accounting firm. We see here after the typical letter about the opinion, what are we doing with the auditor's letter? We see this section here about critical audit matters, and that's going to be our next topic. What are critical audit matters? They're defined here. These are matters arising from the current period audit of the company that relate to, this is what I want to highlight. They involve the auditor's subjective, complex judgments and were especially challenging. So let's put that in here. Areas in which the public accountant or the independent auditor found to be especially challenging, required a lot of subjectivity and complexity. So these are the areas that the auditors are saying, we had to use more judgment here. It wasn't so black and white to assess whether these areas were in compliance with GAAP. We tried our best for these estimates. And what were Johnson & Johnson's critical audit matters? U.S. pharmaceutical rebate reserves. So rebates from managed care, Medicare, and Medicaid. So Johnson & Johnson is creating these products, services, and vaccines, medications, and they're being prescribed to patients. Now, who is paying for these? Sometimes it's the insurance company, sometimes it's the patient themselves, and sometimes it is the government for Medicare and Medicaid. And so Johnson & Johnson is saying we don't know exactly how much we are going to get paid back from managed care, meaning insurance companies, and the government for Medicare and Medicaid. So let's put pharmaceutical rebate reserves as one of these critical audit matters. It's hard to know how much revenue to recognize if we don't know how much we're going to actually end up collecting. Let's see if there's anything else. Litigation contingencies, lawsuits. One of these is talc. You may have heard that in the news about perhaps cancer-causing contaminants in the talc that's in baby powder. And these lawsuits are currently under litigation. They have not been settled. We can find out more by reading this. Another major one, litigation opioids. Probably heard about this in the news as well over the past several years. Amounts haven't been settled yet. But these are the three main areas where the auditors are saying we don't know exactly how much we're going to have to pay out or how much we're going to receive. But we had to use a lot of judgment here, and we want you to know about that. And that concludes this week's video on the 10K and the components we haven't discussed so far. There's an assignment in Blackboard that kind of walks you through a lot of the similar questions that we went through in this video, but for different companies. And we will meet back next week to look at common size, trend analysis, and some relationships across the financial statements.